Welcome back to Investing Talk Podcast.
Today, we're looking at Sprott Physical Silver Trust.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. The first thing we really have to get our heads around is how this thing functions. It's not, a regular company.
Right. It's a closed-end trust. It doesn't have sales or operations in the way you'd normally think.
Exactly. Its performance is tied directly, one-to-one, to the value of the physical silver it holds.
And that value has been, it's been absolutely phenomenal lately.
Phenomenal is the word for it. Looking at the net asset value, the NAV, as of December 24th, 2025, the year-to-date change is sitting at a staggering 145.43%.
That's the kind of headline number that really grabs your attention. But you have to ask, how much of that is real and how much is just a froth?
It's overwhelmingly fundamental. It's a shift in the value of the underlying asset, and this trust is just the vehicle. For the 9 months ending September 30th, 2025, the trust reported over $3.39 billion in unrealized gains on its silver.
Billion with a B.
With a B. And that's what drove the total net assets up so significantly.
Okay, when I see it asked, appreciate that quickly. My first question is always about leverage. Are they using debt to juice those returns? How stable is the actual structure?
And that's where this trust really shines. It's about as clean as a balance sheet can get.
Really?
Zero debt. None. Its only assets are physical silver, over 208 million ounces of it, and it's all completely unencumbered.
Unencumbered, so no other creditors have a claim on it. The stability is just baked right in.
Precisely. And because the operations are so simple, basically just buying and storing metal, their management expense ratio is incredibly low.
What are we talking about?
Just 0.57%. That lean structure is what helps it achieve a pre-tax profit margin of 48.1%.
Okay, so it's a very clean, very efficient structure. But let's talk about the alternatives. If an investor just wants silver exposure, they could buy futures or a standard ETF. What's the competitive moat here? Why this one?
That's the core question, isn't it? And the advantage comes down to two things: what they hold and the protection they offer you. The trust holds fully allocated, unencumbered London good delivery silver bars.
Okay, you got to break that down for us. London good delivery. What does that mean for the investor?
It's the institutional standard. It means high-purity, traceable bars that are accepted on major exchanges. And fully allocated means those 208 million ounces legally belong to the trust. They're not just a paper promise. They are physically sitting in a vault at the Royal Canadian Mint.
So this isn't some unallocated account where the silver might be lent out or used somewhere else?
That's exactly right. It offers a level of purity and auditability that you just don't get with some of the paper-backed alternatives. But here's the real kicker: the ultimate defense against volatility.
The physical redemption option.
The physical redemption option.
Right.
Unit holders can, subject to minimums, actually request to redeem their units for the physical silver bars.
And that's a game changer.
It's a huge structural security blanket. If you get worried about the financial system, you can literally turn your investment back into hard metal.
That feature alone must put a floor under its valuation in the long run.
It absolutely does.
Speaking of confidence, we're also seeing management expand their at-the-market program to $1 billion. What does that signal?
The ATM program lets them sell new units into the market. So expanding it to $1 billion shows that management, Sprott, is very confident that demand is there and that the price of silver is heading higher.
But wait, doesn't issuing new units dilute the existing shareholders?
That's the smart part of the structure. The money they raise from the ATM program is used to buy more physical silver. So they're scaling up their holdings right in line with the new units. They aren't diluting the pool unit NAV, they're just growing the whole pie.
So it's controlled, demand-driven growth.
Exactly. And the demand is there. Average daily trading volume was over $675 million back in September. That tells you a lot of institutional capital is already in.
All right, let's shift gears from the structure to the technicals. With 145% gain this year, the momentum has to be just off the charts.
It is overwhelmingly bullish, yes. Silver hit a new record high on December 22nd, and that pushed the trust right to a new all-time high along with it.
The price action is clearly strong, but let's talk about that quirk of closed-end trusts, the premium or discount to net asset value. Where does it stand now?
As of late December, it was actually trading at a slight discount.
A discount. So you're buying it for less than the underlying metal is worth?
A little bit less, yeah. The market price was $23.96, while the NAV was $24.67, so it's a negative 2.89% discount.
How significant is that? Is that a big discount historically?
Well, this trust valuation has swung wildly. In periods of, real market frenzy, it's traded at a premium of over 33%. But in times of panic, that discount has gone as low as negative 10.34%. So a sub 3% discount is actually pretty modest in that context.
So for a new investor, that sounds like a potential entry point. You're getting a dollar's worth of silver for, what, 97 cents?
If you're already bullish on silver, that's exactly how you'd look at it, yes. It's a small but attractive accumulation opportunity.
And what are the other indicators saying? Is buying strength still there?
The quantitative analysis we see shows a strong overweight bias. You've got confirmed buy signals across the board, short-term and long-term. And even just looking at the one-month return as of November 30th, it was up almost 16%. So the momentum is still very much there.
Okay, so strong structure, massive momentum. What are the key catalysts that could keep this going into 2026?
There are three big structural tailwinds. First is a sustained structural silver deficit.
Meaning supply just can't keep up with demand.
Simply put, yes, that puts a constant upward pressure on the price, regardless of little market bumps.
And on the demand side, is this just about silver as a monetary metal, or is something else going on?
That's the second and I think most exciting catalyst. It's accelerating industrial usage. Silver demand grew by 25% year-to-date through the middle of 2025. This isn't just investors hoarding corns.
This is industry needing it for production.
Exactly. Photovoltaics, so solar panels and other green energy tech. Silver is critical for the energy transition. It's becoming a necessary industrial commodity.
So you have a supply deficit, meaning exploding, non-negotiable industrial demand. That's a powerful mix.
A very powerful mix. And the third factor is just the macro picture. The expectation of future rate cuts from central banks tends to boost precious metals prices. All three are lining up.
That paints a very bullish picture, but we have to look at the other side. After a 145% run, what's the bear case? What are the biggest risks?
The top risks are really tied to the underlying commodity price itself. Risk number one is simple momentum exhaustion. After a rally this big, a cool-off or even a sharp reversal is always possible, especially if that industrial demand doesn't quite meet the forecasts.
So a global manufacturing slowdown would be the big external threat.
It would. Risk number two goes back to the discount we talked about. If the market gets volatile, the discount to NAV could widen again, back towards that historic low of negative 10%.
Which would mean the trust's price could fall even if the price of silver stays flat.
Correct. Short-term holders could definitely feel some pain there.
But the zero debt structure and that redemption option, they act as a buffer against those risks, right?
Absolutely. The debt-free structure means there's no external financial stress, and the physical redemption option acts as a long-term safety net. It puts a practical limit on how wide that discount can get over time. So to sum it all up, this trust offers unmatched exposure to physical silver during a period of record prices and just huge gains. You have a market supported by structural deficits, rising industrial demand, and that unique physical redemption mode. All of this positions it very strongly for a multi-year hold, especially with the bullish forecasts for 2026.
If you found this analysis helpful, make sure you hit that subscribe button so you don't miss our next market breakdown.